Imagine waking up tomorrow with severe chest pain. You rush to the hospital. The doctors act quickly. The treatment is successful and you're finally safe. Then the bill arrives. It's tens of thousands of dollars. For many families, it's not the illness that causes long-term financial stress. It's the cost of treating it. That's exactly why health insurance exists. But here's the problem. Millions of people pay for health insurance without really understanding how it works. In the next 5 minutes, you'll learn the basics in plain English. So the next time you hear words like premium, deductible, or copay, they won't sound confusing anymore. Let's get started. What is health insurance? Think of health insurance as a financial safety net. Instead of one person paying a huge medical bill alone, many people contribute smaller amounts over time into a shared system. When someone needs eligible medical care, that system helps cover part of the cost according to the terms of their plan. You're not buying perfect health. You're buying protection against unexpectedly high medical expenses. It's similar to wearing a seatbelt. You hope you'll never need it, but if something goes wrong, you're glad it's there. The 5 terms everyone should know. Let's make the confusing words simple. Premium. This is the amount you pay regularly to keep your insurance active. Think of it like a subscription. Whether you visit a doctor or not, this payment keeps your coverage in place. Deductible. This is the amount you generally pay yourself for covered services before your insurance starts sharing more of the cost. For example, if your deductible is $1,000 and you have a covered medical bill of $5,000, you'll usually pay the deductible first. After that, your plan begins paying according to its rules. Copay. A copay is a fixed amount you pay for certain covered services, such as a doctor's visit or prescription medicine. The exact amount depends on your insurance plan. Coinsurance. After meeting your deductible, some plans require you to pay a percentage of covered costs while the insurer pays the rest. For example, if your plan has 20% coinsurance, you would pay 20% of eligible costs, and the insurer would pay the remaining covered portion. Out-of-pocket maximum. This is an important protection. Once you've paid up to your plan's annual out-of-pocket maximum for covered services, the insurer generally pays 100% of additional covered costs for the rest of that plan year, subject to the plan's terms. A simple example. Let's imagine Alex breaks an arm while playing football. The hospital bill is $10,000. Without insurance, Alex may be responsible for the full amount. With insurance, what Alex pays depends on the plan's premium, deductible, copays, coinsurance, and out-of-pocket limit. Every policy is different, but insurance can significantly reduce the amount a person pays for covered medical care. The key lesson is this. Health insurance doesn't mean every bill becomes free. It means the financial risk is shared according to the rules of your plan. Common mistakes. Many people make these mistakes. Choosing the cheapest plan without comparing coverage. Ignoring which hospitals and doctors are included in the provider network. Not reading what treatments, medicines, or services are covered, and waiting until they're sick before learning how their policy works. A little research today can prevent expensive surprises later. Health insurance can seem complicated, but the basic idea is simple. It helps protect you from the financial impact of unexpected medical expenses. Before choosing any plan, compare the costs, the coverage, the provider network, and the official policy documents. The right choice depends on your needs, budget, and where you live. If this video made health insurance easier to understand, consider subscribing. Thanks for watching, and see you in the next one.